we focus on acquisitions and management of value-add multifamily apartment complexes. Our goal is to create long-lasting relationships, not just to be a partner for a deal, but to create relationships that last. With our partners, Resilience Equity, we have over 50 years of combined experience in real estate investing with over 7,500 multifamily apartment units under management. We're very passionate in what we do and enjoy partnering with novice as well as seasoned investors. We have a 5 property portfolio to share with you today, totaling 277 apartment units in Tulsa, Oklahoma, that has a ton of upside potential. This property is currently classified as a 506C offering, which means this offering is available for accredited investors. Please consult with your accountant or financial advisor to see if you do qualify to be able to invest in this. Now, short disclaimer, guys, this is just for educational and informational purposes only. This is a full disclaimer on the screen. We are not tax accountants or lawyers. We recommend that you thoroughly read our disclaimer that you see there on the screen in front of you and the investment document, the PPM, the private placement memorandum, offered at the end of this presentation when you sign up on the QR code to access and fill out the subscription document. Now, that PPM is our actual offer that you'll be able to understand all of our obligations as well as your commitment on there. So come evaluate a business relationship with us. We are not just here for a deal. We are here for you in the long run. So let's walk through what you're going to expect tonight. So I'll run through a little bit about the management team, give you guys a nice background on us. Yannick will walk us through the market summary and give us a little bit of reviews on each of the properties. And then I'll bring us back with some of the numbers and go through the return details. So if you guys are ready, we know that having a strong management team is the most important factor in the success of a project and a team this big. The operator question that has been going back and forth is really what is going to show in this specific economic environment, what returns are going to be determined. It's the strong operators that are going to be able to withhold, and stand through any tough times that comes through an economy. So let me introduce you first, the Gold Bar team. Cindy McGuire, our investor entrepreneur for over 25 years, acquiring real estate properties with value add in single family, multifamily, commercial, and hospitality. With a background in engineering and master's in business, her calculated and project management approach to each asset yields organized, process-driven solutions for which make potentially challenging properties even more exciting for us. Yannick Matthews, based out of Central Florida. Yannick's our All-American kicker whose 20 years of sales management in B2C and B2B organizations is the deal dynamics that know how to punt any negotiation, whether it's brokers or property managers, right back to their end zone. And then there's myself, Marichelle Matthews. I handle all the strategic partnerships for Gold Bar. My background is in corporate client management and Fortune 500 C-suite relationships, enabling our team to evaluate the enterprise level operations, or as I like to say, raise the Gold Bar. Now, on the bottom there, you'll see our sponsors and key principle. And what this does show you guys is that experience matters. In multifamily, experience really does matter. What you see on the screen here is ownership and interest in over 8,000 multifamily units, 50 plus years of combined experience in real estate investing, 2 property management companies built from the ground up, extensive asset management with construction management experience. Thanks to the experience that this team has and endured already, it becomes such a value-add advantage for all of our partners, including and especially our investors. We have the experience and we have the opportunity. A strong operating team matters.
Absolutely, Marichelle. Thank you so much. Look, in addition to a strong operating team, market selection is equally important. We focus on opportunities in emerging markets where local economies are expanding, like the Tulsa market. Expanding economies equals more employment opportunities, increases in net migration, which ultimately sums up to a strong robust tenant base. It's critical to our investment strategy to be extremely diligent in choosing a market. It helps us identify undervalued multifamily properties for acquisition, value optimizations, and management and disposition opportunities. We characterize emerging markets primarily by analyzing local economic reports, population and job growth, rent and property value trends, and path to progress indicators like major redevelopment and planning that impacts the livability of the surrounding community and the value of the property. We do this by leveraging four economic drivers, which is government, economy, technology, as well as societal factors. The local government here in Tulsa is dedicated to attracting jobs. They've implemented several pro-business policies and regulations, including incentives for companies that invest in the local economy, committing over $510 million in economic development projects, rated number 3 out of the top 10 metro areas for 2023 via Freddie Mac, and has earned a top tier designation as one of the best cities for startups. As a result, the economy is strengthening. Been awarded a federal grant. Unemployment is lower than the national average, with positive job growth increasing just below 3% over the last year. Although Tulsa is known historically for oil and gas, the city has coined a different slogan for the future that we love, a new kind of energy. It's an intentional move toward the technology-centric economy, investing in parks, educational programs, even incentives for remote workers to relocate to Tulsa, all to attract talent and promote its technology sector with the Tulsa Remote Program. So look, we have supportive, dedicated government committed to growth, positive trending economy focused on technology and innovation, all while being 11% more affordable city to live in than the national average. You heard that correctly. There's a strong focus on education here as well. Tulsa has 86 public schools serving 35,000 students, 15 colleges and universities to choose from for higher education, such as Tulsa University and Oklahoma State University. The demographics are also strong. Steady population growth forecasted over the next 5 years. Household income projected increase 2.5% over the same 5-year period, and median household income and home value projected increases over the same 5 years. These are the factors that for us screamed emerging market. Because I mentioned earlier, 510 plus million in economic development projects that are complete game changers. I'm going to go over a couple of them. We have 300 million funded expansion of the port of Catoosa. Now, this port connects Tulsa to the Mississippi River and the Gulf of Mexico, making it more competitive and attractive for industries looking to access national and international markets. We have 25 million to preserve Route 66 and celebrate the history and culture of this iconic roadway, helping to generate more tourism while also spurring economic growth and development in the region. 60 million investment into the historic Noma Market District, the mixed-use development, retail, commercial space, and residential. This is focused on the support of northern Tulsa. It's historically been underserved and marginalized in the city's development effort. I mentioned that grant, Build Back Better, American Rescue Plan grant, the amount of $38.2 million awarded. Funds will be used by a Tulsa-based coalition of organizations, including to create the Tulsa Regional Advanced Mobility, or TRAM corridor. It's anticipated generating 30 to 40,000 jobs, the equivalent of 3.5 to 5 billion in economic activity over the first 2 to 3 years. Amazon also opened more than 2.6 million square foot facilities in Tulsa, known as the Toll 2, also the Toll 2. It's a canoe electric car company, created over 2,000 jobs. Booming. Tulsa's checking all of our boxes, guys. We have the local government dedicated to attracting jobs. Jobs are being created rather than lost. People are moving in rather than moving out. Rents and property values are rising. Tulsa's raising the bar. I'm sure you can get and you can hear and understand why we love this market. Let's go into some of the properties details, let you guys know why, and let you see why we love these properties as well. So you're here with us now. The Tulsa 5 investment opportunity, 5 apartment complexes consisting of 279 units total. We have Cove Memorials, 93 units, Bradford Townhomes, 62 units, Delaware Gardens, 30, Melrose with 54, and Silverwood with 40. The Tulsa is a steady growth market, high demand of rental units. Therefore, cumulatively, the portfolio is achieving 94.3% occupancy today. So these before purchase, the property is already stable and positively cash flow. Powerful. Gets better. Total loan amount for the portfolio is $14,045,000. Each property in the portfolio comes with an average of 3.65% fixed rate assumable loan. Lasts until 2031. This gives us ample time to add value to the properties during our hold period and pass these great rates along to the next buyer. Put that in some perspective. If we were just going to go get a loan today, agency loan, probably around 6+% of a rate. Almost cut that in half. Next, look, we target properties, guys, just so if you don't know, we target properties in this similar vintage. So we're talking about 70s to 90s. These properties fit perfectly into our value add strategy. They provide the best opportunities to purchase at a reasonably below market rent price due to the outdated amenities. See, multifamily properties are primarily valued based off of its rental income. It's a true business. We purchase at the sweet spot, renovating, upgrading these properties, bringing them up to market standard, and ultimately unit pricing. This is the process that this deal team are experts at. In a nutshell, look, we purchase low, upgrade amenities, allowing us to attract better tenants, increase rental rates to market standard, which leads to higher returns for our investors. With average rent today just under $200 across all properties, we're confident in our business plan to capture market rent in time for when it's ready to exit, maximizing our property's values. Our advantage is in the economies of scale. We have 5 properties. It reduces the cost of professional property management staff, materials needed for upgrades, also gives tenants different building types and unit sizes and locations to choose from within the market, making us appealing to many different tenants in their housing needs. In addition to that, we're not relying on the success of just one property. This diversification helps us reduce risk for our investors, creating a more stable investment for you all. Let's take a deeper dive into the business plan. What we know is curb appeal attracts new tenants, keeps existing tenants satisfied, creating a more welcoming exterior landscape begins with our exterior upgrades. We'll focus on balcony repairs like wood rot and structural needs that is common for these vintage properties. We ensure the property obviously is structurally safe and compliant with code and regulation, and that it also beautifies as well. Sufficient lighting, making the properties lighter and brighter at night, and landscaping and signage, refreshing the exteriors with power washing and some light paint where needed. Next, we'll go to interior upgrades. Rehabbing the front office to create that good first impression for new tenants, it's optimal, right? We want to make sure we're putting our best foot forward. We're also going to work with some kitchen upgrades, replacing countertops, cabinets, appliances, some modern finishes and functionality, bathroom upgrades such as vanities and fixtures, bringing them up to market standard. What we do is we break down our business plan into 3 phases. So first phase is our top priority, right? We want to establish strong relationships with our tenants during the takeover process. We'll do that by personally reaching out to each one of them, informing them of new management, and attack any pending work orders showing good faith and prioritization of their needs. This helps build meaningful trust. We make immediate improvements to the property's exterior to create excitement around the new management team. And our direction. Then we'll set proper expectations for our tenants. Phase two will start to evict any slow or non-paying or troubled tenants, implement collection and screening policy, evaluate our tenant base to make sure that we're able to keep good tenants, contact those whose leases are expiring in the 90 days to make sure that we can mitigate some of the risk of losing them. Prepare for make-ready units, reducing turn time and capturing market rents for the new incoming tenant. Phase three, start upgrading amenities, repositioning interior to premium units and hosting community events, adding additional income streams, getting ready for exit. We are confident. Some of the reason why we're so confident in executing our business plan is we've partnered with Asset Living. It's the third largest property management company in the US. They're currently in 43 states with over 5,700 employees. They have a proven track record of managing over 75,000 units, achieving 95% average occupancy rate. So we're confident in their ability to successfully manage our portfolio and execute a smooth takeover process. And look, we're fortunate and excited to work with them and their experience and expertise as much as we are excited to work with you all. I'm going to let Marisha go into some of the numbers and some of the details. I'm sure everyone on the call is waiting to hear about the returns.
Thanks so much, Yannick. Creating a home for our tenants and building a community is part of the reason why we do this. We also love this to create a community of investors who understand the value of investing in multifamily apartments, making a difference in their futures as well. Multifamily real estate investments have outperformed the S&P 500 for decades, not only for the big corporations, but investors like you. I know you guys are all excited about the numbers. I am as well. So let's look at where this money is going to be coming from and what it's going to be used for. So we're actually acquiring the assets for $19 million. We're baking in another 300, just under 325,000 for closing costs. We've also budgeted another almost 3 million in capital expense reserve. We have to also put in the cost of about another 140,000 to assume those low interest loans. We also have in there a few $100,000 in reserves and startup fees for a total acquisition and construction of 22,127,315. We bake in another almost 540,000 for sponsorship fees to combine the acquisition fee as well as the underwriting and due diligence fees. This is the amount that's split amongst the management team for acquiring the deal, all the tasks and items bringing it to closing, and managing the assets for the full 4 to 5 years. Now, the total sources equals the total uses of 22,615,417. Here on the screen, guys, we have the 5-year pro forma. It's a breakdown, a lot of details on this, which of course you can comb through when you do download this off the portal. If you haven't already registered since we've been on the call, please do so. The link is on there. I do want to share that we do underwrite very, very conservatively to keep not only your money safe, our tenants safe, and give ourselves an opportunity to over deliver for you. When I say we underwrite conservatively, we account for 2 to 3% rent growth, although some markets saw double-digit rent growth the last few years. I want to point out too on the slide right there in the middle, the net operating income. Year one will be just around 1,032,937. That is actually how value is determined, and increasing it is how value is created in the multifamily space. So delivering on the business plan that Yannick touched on will allow us to increase the rent that will drive that NOI, that net operating income year over year, to a conservative estimate of 1,805,435, allowing for a profitable exit. Another thing that you can see there on the bottom of the screen is the cash on cash. That's where the preferred returns that investors like you will be actually receiving in cash flow throughout the hold period. So let's get down to what it means for investors like yourself, right? So investors are actually paid two ways. One is by cash flow during the 4 to 5 year hold time, and the second way is from proceeds from equity at resale. The investment is available to, again, accredited investors, and the minimum investment is 50,000. The preferred return is paid to investors first before anybody else is paid. So that 7% is distributed quarterly, year 2 through 5. The returns are delayed during that stabilization period and caught up as soon as possible during the whole period, at the latest at sale. So here on the screen, I have a sample investment. Let's say you're investing $100,000. With our conservative projections, with that cash flow and equity gains, we project that you'll turn that into $206,000. Firstly, by 35,000 in cash flow, combined cash flow over the 5 years, plus a projected $71,000 in additional proceeds from the equity growth. Now, although we've modeled this deal at 5 years, we are always evaluating the market and where we are at. If the numbers make sense, and let's say, for instance, we are already at 5 year projections, for example, month 1 of year 4, we'll take into consideration exiting early. Now, as investors, we invest for monetary returns, but as real estate investors, we love not only the dollar upside, but also the tax benefit. So again, we're not accountants or tax professionals, but just like having a retirement plan, having a strong investment strategy includes a strategic tax strategy. So for the Tulsa 5, we will be ordering a cost segregation study. So what that means is the third party engineering company comes in, and after the cost basis for the land, they'll itemize what parts of the property will depreciate and can be accelerated upfront. That amount will be shared down to investors and on your K1 statements next year. Although it's not an exact amount, let's just say we estimate it could range anywhere from 20 to 30 or more percent in cost segregation, which, for example, an investor investing $100,000 could be looking at 20 to 30,000 or more in tax relief for 2023. A lot of our investors who work and do well professionally would rather invest their money and have it grow and work for them and offset that tax burden rather than give it to the government. Uncle Sam rewards us for investing in real estate, and that's golden. So just a quick recap of the deal. Go ahead and zap that QR code, guys, right there on the screen, and you'll be able to register for the portal. So the purchase price for this portfolio is $19 million, with an equity raise of $9 million. The average annual return is 20.65%, with a preferred return of 7%. The minimum investment is $50,000. The anticipated hold period is about 4 to 5 years. We are currently open for accredited investors. So this is really the investment for those who are looking to scale up, let's say from single family properties to multifamily, with us facing a recession and the fear of like unstable markets, interest rates rising, home prices dropping, and the equity you thought you may have had and now lost because of its natural appreciation. Multifamily, is something that we are very confident performs very well, right? Since we have the strategy and systems in place to force the appreciation. Also for investors that are maybe just looking to diversify their investment portfolio with real estate, or maybe you're looking to just grow your retirement fund. What we also find is that there are a lot of people that are just getting into the multifamily space and don't have the doors yet and the credibility to be able to leverage a performing portfolio to get better deals. This is a great way to influence your real estate owner, your SREO, and go ahead and get you some doors. So now that you guys have seen us and you've seen the deal, go ahead and take action, guys. Go ahead and zap that QR code that's on your screen. Any questions you have, go ahead and put them in the Q&A on the chat. I also wanted to share as well some of the things that we went over on the due diligence. I'm going to go ahead and push this over just to give you guys an idea of our timeline right now. And that way also, if you're looking for that link to the portal through your computer, you have that also in the chat. So what was really interesting is we actually did the due diligence. The sponsor was out there, not last week, but the week before, walking the properties. And what we discovered was there were actually 3 units that were not accounted for in the information that was provided to us. And those 3 units, once we get them makeshift ready, they will actually be, when they are make ready, we will be able to go ahead and rent those out. It'll generate over $200,000, almost $250,000, according to our estimation, over the 5-year hold time. So that's additional income that we did not even know that we were going to be able to generate, all because the OM and the documentation, there was no OM. This was an off-market deal that was provided to us, did not count for those 3 units. So that was very interesting to find that information out 2 weeks ago. We're really excited. We still have room for some accredited investors. So if you're looking to offset your 2023 taxes, please go ahead and register in the portal. We are more than happy to go ahead and walk you through any subscription documents. They are currently available on the portal now. The funds are due by Wednesday, August 9th. Our anticipated close date is going to be Friday, August the 11th. It is currently open for accredited investors, but we'll be go ahead and helping anybody who wants to get into a deal. As far as this project, go ahead and help you guys get up to speed. So let us know. Send us a message if you need to, and we're more than happy to walk you through everything. This is a first come, first served basis. So, come raise the gold bar and invest with us, guys. We are so excited to partner with you.
Absolutely. What are the questions that you have for us at this time, folks? Then if you have any questions, pop it in that Q&A and we will be sure to answer those questions.